back to earnings, and we're now going to put the spotlight on Arvind Fashions. It's been a good second quarter, and it's a good quarter after having the best ever first quarter. Shailesh Chaturvedi, the MD and CEO, now with us on the channel. Thank you so much. So like I was saying, first quarter was the best ever performance by the company. It's now gone on to report its best ever revenues in the second quarter. Going forward, what is it that we can expect? What kind of a guidance can you give us?
We have a very strong growth momentum currently, and we have very good growth in quarter two, highest ever quarter. We did almost 1,200 crores, which is growth of 46%. So our H1 momentum has been good. We've grown more than 40. And if we extrapolate, we should hit the kind of numbers you are talking about, and we'll see. But I can say that we continue to be very optimistic about the second half, and we see a strong growth momentum.
That's right. And the third quarters, and we'll see the numbers coming in, right? That's going to coincide with the festive season, Durga Puja, Diwali, all of that. But there's also the wedding season that's coming up. Every year, the big fat Indian wedding gets bigger and even fatter. What are your expectations? We've seen how industry bodies are talking about maybe 32 lakh weddings this wedding season.
We see good opportunity for wedding as well as for winter wear. So in wedding, obviously, we get a lot of strong demand for our shirts category, trouser category. Footwear is doing really well, suits and blazer. And also, I'm equally excited about the winter wear, and we have a very strong, dominant position in that category. So a brand like USPA, Arrow, Tommy Hilfiger, they all have very strong winter wear lines, and we would enjoy market leading business in winter season as well as in the wedding season.
And Mr. Chaturvedi, even when it comes to margins, they have improved consistently, but still lower compared to some of the other peers who have a very similar revenue profile, but a higher margin at, say, close to 15%. So question is, when do you think that you'll be able to reach those levels, and what are going to be the factors that will drive your margin improvement?
So we're very happy with the progress we have made. You look at our GP have grown up, gross margin have gone up by nearly 3%. That's flown a lot into our EBITDA margin, which have also grown up close to 3%. And we will continue the journey. It's a journey. We are very clear that if you look at last 4 quarters, been profitable. We've been improving our EBITDA margin every quarter, and I'm sure the gap will reduce, and that's a journey. And we are very optimistic about the way our scale is growing up, our brand portfolio, our increase in profitability. It all converge towards the best in the industry. Very hopeful. Now, what will drive that? I think there are 2-3 big reasons that are driving that improvement in our margin. First is the scale itself, and there is a leverage that comes from the scale. Second is the way we have executed. You've seen in last 2-3 quarters our execution of our brand promises in the stores, like-to-like growth, our increase in full price sell-through. We've been able to reduce discounting, which all then flows into GP and flows into the EBITDA. And some of our brands which sort of needed focus and turnaround, they have turned around, and because of that, our increase in EBITDA will be very, very encouraging going forward. So I don't have a doubt that in the next 12-month journey, we will be even more competitive than that we have become compared to the past. So I think we look very excited about this journey of growth and very profitable growth.
And last quarter, one of your power brands, Arrow, turned EBITDA positive. Are we seeing a turnaround for some of the other brands, like the emerging brands as well, this quarter?
We have a very, very strong portfolio of brands. So if you look at our 6 brands, US Polo, it's crossed 1,000 crore NSV by October. So market leading casual wear brand, probably the biggest in the country. We have the super premium leaders in Tommy Hilfiger and Calvin Klein. Formal wear, Arrow, we mentioned that Arrow needed during COVID sort of a change, and we worked very hard to turn around, and we're very happy to share that Arrow is EBITDA positive, and that journey will be going forward. So Arrow was the focus area, and that we have focused on that, and it will continue. In emerging brand portfolio, we have brand like Sephora, which is the leading brand in the beauty cosmetics segment, and it's grown very well in this season. In like it's close to 30% and very good number. Calvin also is delivering very good number, and we are very confident that the emerging brand portfolio, where the bulk of the revenue comes from Calvin Klein and Sephora, will continue to improve its profitability and continue to grow.
Right. Also, a word on the street is that Reliance Retail is in advanced talks to buy rights for Sephora India from your company. Where would you expect an announcement to come through, and could you provide any details on the same right now?
We don't respond to market speculation, so I would not comment on that. We are happy with Sephora business. In the last quarter, Sephora like-to-like growths have been very impressive, and we'll continue to put our heart and soul behind that brand.
Sure. You know, the retail channel contributes a significant portion to the revenue and has also comparatively higher margins. Given that profitable growth is your mantra, could we see a jump in the retail store addition run rate? And what then is the capex outline for that?
Retail, as well as offline retail, as well as online, are very big focus for us. So retail typically contributes to around 40% of our revenue, and it's a profitable. Our like-to-like growth in Q2 were 25%, the industry leading same store growth. We're very happy with the way our stores are coming up, and we opened close to 45 stores in quarter 2. We want to accelerate the pace further and look at close to 200 stores opening in a year. We are working on that kind of aspiration. So you're right that retail is a big channel, profitable, and we will continue to accelerate the store expansion there. And we will also continue to focus on online and omni linkages of these offline stores, so that high single digit of our store business come from online omni linkages.
Okay, so that's Arvind Fashions targeting to open 200 new stores every year. Now, if I go through the fine print and we look at offline versus online, the online channel, we've seen a 75% growth versus the pre-COVID levels. It's also contributing 25% to overall sales. You talk about opening 200 offline stores. We're seeing how online is performing. Can this momentum continue?
Online is a very dominant channel for our company. We're the market leader in online space. Even this quarter, online contributed 26% of our revenue mix, very healthy, and it's profitable. And we did almost 100 crore plus monthly sale from the online business. So online is a very strong part of what makes AFL. And we have a clearly stated goal of that we want to grow at 20% plus. If you look at our CAGR in COVID, we've grown at more than 20%, and we want to continue to grow in online channel. I think the focus is now on omni linkages. Like I said earlier, we want the customer to experience a brand offline and online in a similar way. So we are linking our stores with omni capabilities. We added 300 more stores in Q2 with omni capabilities. Wherever omni operates, the stores get almost high single digit contribution in their sales from omni linkages. So the way forward is to continue grow at a very healthy pace in omni. It'll continue to be between 20 to 5, around 25% of our revenue mix, and it'll continue to grow through omni and other initiatives.
Okay, fair enough. And I just want to understand, given that we've seen a complete normalcy now in footfalls, what is the average transaction value? Has that seen an uptick? And given the trend that we've witnessed, is it safe to say that it's above pre-COVID levels?
If you look at our revenue, it's grown at 46%. And if I look at the 2019 pre-COVID data, it's still grown at 32%. I mean, so if you really see, markets have really now gone way beyond the pre-COVID levels, and the businesses are growing at much bigger scale. And like we said, you mentioned last quarter was the highest revenue, and this quarter we've beaten that, and again we have the highest ever quarter. So the scale and the profitability jump from pre-COVID levels have been very, very impressive.
Right, we'll leave it at that. Thank you so much for joining in on the earnings. Let's quickly take a